What's up, everybody? Welcome to the Stocks channel. My name is Cory. This is going to be your daily stock market update. Today we see the VIX going up over 40 and we got absolutely routed across the board with most indices going down over 3%. So we got a lot to cover tonight, so please remember to help me out by smashing that like button and subscribe to the channel so you can follow along with all of my updates. First up, we'll take a look at the SP 500 SPY ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. So on the SPY ETF, we see the price action closing negative 3.42% down, and today was extremely bearish. We started the morning with a huge gap down and started running lower all day long, eventually closing way below the lower Bollinger Band. Now, the one thing to note is this gap did not act as support whatsoever, and we blew right through it like it was not even there. So we need to go ahead and delete that gap because it's definitely filled now. But we did open a new gap above. So this new gap above will be a resistance level for the bulls, and it's open all the way up at a price level of $338 all the way down to $332. So this is a huge gap above, and as we know, gaps typically get filled. So we have now filled that gap below, and if we zoom out, we do still have a gap way down here that goes all the way down to 286, but we're not going to consider that gap unless we continue this downtrend. So right now, let's focus on what's in front of us, and this gap above is the closest gap to the price action. So it's more likely we're going to start seeing a retracement and a fill of this gap soon, and it's likely that we could see a short-term bounce because of how big this gap is. There's going to be a lot of pressure on the bears, and there's going to be a lot of opportunity for the bulls to buy at these lower price targets and try to close these gaps above for a quick trade. So you can see we blew right through our 0.618 Fibonacci retracement level at 333, and we also blew right through that gap at 329. So there's no way you can look at that price action as anything other than extreme bearishness, but even a dead cat will bounce if you throw it hard enough at the ground. So it's very likely from these levels we could see a bounce, but we need to remain bearish until we start to see a break of some of these critical resistance levels. So while there could be a bounce off of these levels and we are getting oversold, we need to remain cautious because it could be a short-term bounce before a continuation of the downside. So the trend is becoming extremely bearish because this 5 EMA is breaking all the way down below the 50 EMA, and it's starting to go down parabolically in a straight line, and it's really starting to pick up bearish momentum. You can see the 13 EMA crossed below the 20 simple moving average, and the 5 EMA crossed below the 50, and the price action is well below the lower Bollinger Band. You can also see here we did have an increase of volume today, so there was a lot of trading today, and the volume on the SPY ETF was 126 million. So we're definitely seeing a lot of volatility, which we knew because we've been monitoring the VIX, and we knew when the VIX got into the 30s and now it's in the 40s, we could see these negative 3 to 4% days. So we want to be very cautious at these levels, and right now we're getting extreme bearishness that we need to be very cautious with. So we will have resistance levels at the previous gap at 331, and we do have new resistance at the newfound gap at 332 all the way up to 338. And also don't forget about our resistance trend line, which shows that we're trading in this downward trend. And if we go to a 1 hour chart here and we clone this line, we were trading inside of this channel on the SPY ETF, and you can see with today's price action that we have now broken out of that channel to the downside. So everywhere you look, there's all bearish signs, and there's nothing to really be bullish about right now other than a technical bounce off of these levels, which could just be a short-term bounce. So you can also see we're getting close to approaching the lows that we had at the end of September during that large correction. So we could also try to find support levels at those lows if we do continue to trend downward. So right now we'll go ahead and draw in a support level down at that previous support level, which is a price target on the SPY ETF of around $321. That will be the next level of support for a possible entry. Remember, if you're trying to buy into this market, you really want to be patient and you want to wait for one of these support levels to hold up, and we want to see a confirmation bounce. If you've been trying to guess any of these Fibonacci retracement levels as support and you're too impatient to wait for that confirmation bounce, you're losing a lot of money because you haven't seen a bounce off of those levels. That means it's not technically support until we see the confirmation. So again, this support level down here at 321, if we do get to that level, we want to wait for that confirmation bounce, and then we could enter a position and set our stop loss below support. So it's super important to be patient and protect your money by having good risk management at these levels. This is 100% a falling knife, and you don't want to try to catch a falling knife. You want to wait until we get that confirmation bounce, let some of this volatility shake out, and then we can start being buyers of this market. Now, the other thing to note, because we are in a bearish trend, we do have resistance levels that the bears are going to try to continue to use as their support levels to drive the market lower. So if the SPY ETF starts to bounce and we get up to these resistance levels, we could see a rejection at resistance and a continuation of the downtrend. That applies for any of these levels that we have on this chart, and all of these levels are now available for the bears to use as resistance levels, just like the bulls were using these levels as support. So be very cautious in this market and be very patient if you're looking to go long. There's always going to be a good buying opportunity right around the corner, but we need to be patient and we need to wait for the right opportunity. Now, if you did already buy into this market, I would not panic sell and I would just be patient and hold that position until we get a bounce. The best time to sell if you're trying to get out of the market is on a bounce of the bearish move. And then if you want to get out and we get rejected at a resistance level, you could go ahead and exit there. Exiting at the lows is absolutely not the best time to get out. And there's always going to be an opportunity to exit a trade on a bounce. The market is not going to go down in a straight line forever. And eventually we will get a bounce. You just have to be patient and remain calm. And if you want to exit your positions, you will always get that opportunity, but you don't want to sell and you don't want to panic and you don't want to run for the door just because the market's going down. Use this as an opportunity to find some buying opportunities in some stocks you've been wanting to own and look for those support levels that are going to hold up. And when you get that bounce, you can start accumulating a position. So next up, let's take a look at the Nasdaq 100, and this is the QQQ ETF. And we see that the Nasdaq 100 also gapped down in the morning and we never looked back. The Nasdaq also came all the way down to our 272 gap and closed it, so we'll go ahead and delete that gap. You can see we closed just below that gap support level at 272, and it's so close to call that we could actually find support at this level. So if we do start to see a bounce on the Nasdaq tomorrow, we will know that that gap is going to hold up as support, and I would look for our price target to be a close of the gap up here around $281. So on the Stocks Channel Discord, I did identify this as a buying opportunity today. And if you're interested in looking for buying opportunities from the Stocks Channel, all you need to do is look in the description below and click on the link that brings you to the memberships. Tier 2 and Tier 3 members get access to the Discord and will have access to all of my entries and exit trades. So keep in mind, on this trade, it is somewhat risky because we have not got that confirmation bounce yet. The Nasdaq 100, as we know from the crash in March, usually holds up the best during these uncertain times because these big tech companies are usually the ones benefiting the most from this work from home environment that we're currently finding ourselves in. Don't forget, tomorrow we also have tech earnings on Apple and Amazon, and if Apple and Amazon could beat and guide up on their earnings, we could see a continuation to the upside. So there's a lot of catalysts coming in tomorrow, but they could equally be bearish catalysts because if they don't beat earnings and they guide down, we would not expect to see the stock market start to continue to run. But remember, we're likely going to see that dead cat bounce, and we're likely to see a technical bounce because of how oversold we're becoming. So remember, these resistance levels for the bears are going to be opportunities to sell. We want to see the trend reverse, and right now we have the 5 EMA trading below the 13 EMA and the bearish price action closing below the 50 EMA. So you can see all around that these charts are bearish and there's nothing too bullish about this chart, and we don't want to just buy in and go long until we start seeing confirmation bounces and breaks of resistance. So there is trades to be made while we're in this volatile range, but we don't want to get overly bullish and go too long into a position that we're not willing to sell at. So right now we're looking for trade opportunities, not long-term holds, and we're going to trade a little bit and take advantage of this volatility while we're getting these 3 to 4% swings. So you can see on the Nasdaq 100, we closed right on top of the lower Bollinger Band, and it's likely that we could see a bounce off of these levels. So watch for this $272 level to act as support. And if we get a bounce off that level, it could be a good short-term trade for the short-term bounce that we're likely to see. Next up is the Dow Jones Industrial, which is the DIA ETF that we're looking at. And the Dow Jones got absolutely routed today and actually gapped down below the gap that was open at $272. You can see that the Dow is now coming down into the next gap below that, which is right around $264, and we did get a little bit of support there today. You can see that's also the previous low right around 265 that we had at the end of September. So it's likely that the Dow is also going to see a short-term bounce off of this support level right around 265, and we are trading way below the lower Bollinger Band, so it's likely that we start to see a retracement back into the trading range. But you can see how bearish the Dow is looking. The 5 EMA has now closed below the 50, and the 20 simple moving average has rolled over and it's starting to slope negative. So we have short-term bear trend and medium-term bear trends, and we really have to be careful and not get too bullish on this market in the long term. There's still short-term trades to be made, but right now I think your best bets if you're going to be a trader on the Nasdaq tech stocks, because they will benefit the most from this new environment that we're finding ourselves in. So on the Dow, we have critical support at 264 and 265, and we're going to have critical resistance levels at 272 all the way up to 274. Next up is the VIX, which is our fear indicator. And remember, the VIX did have this resistance trend line where we were making lower highs on the VIX. And you could see with today's price action on the VIX that we closed well above that resistance level all the way up to the 40.3 level. So volatility is back in a huge way. And when the VIX is in the 40s, we can start seeing continuation of these huge swings from 3 to 5%. Now remember, the VIX being this high doesn't guarantee it's the best time to short. Put premiums are going to be very expensive, and it's not the best time to be trying to short this market after we've already gone down so much. So we could see huge moves to the upside just as likely as we could see huge moves to the downside. So right now on the VIX, we want to watch this resistance level, and we want to see if the VIX is going to come back down and try to break back below the 34 level, or if we're going to stay at this elevated VIX level, we're likely to see a crazy amount of volatility remain in this market. So when we have volatility this high, you need to be very careful with your money, and you need to understand your entries and exits on your trades very closely. If you're not sure what to do, you're better off just staying in cash, let this volatility shake off and let everything cool down, and then you could start stepping back into this market when the volatility subsides. Next up, let's go ahead and take a look at Apple, which is our market moving stock. And we see Apple had a very bearish day, closing down negative 4.63% and closing below our 0.618 Fibonacci retracement level at $111. Don't forget, Apple does have a gap below that won't close until we get a price level of $96. So if Apple is going into a bearish trend, which it looks like it is, we have to acknowledge that gap below because we could see those price levels yet again. So remember, Apple's earnings is tomorrow after the bell, and that is going to be a huge catalyst for the bears or the bulls. And if Apple doesn't do well on their earnings report, it's likely that we're going to see this gap below get closed, and we're probably going to see Apple go to $96. If Apple does well, we'll most likely find support off this level and continue the bull market. But it's all on the hands of earnings right now, and we need to be patient and watch to see if earnings is going to be good or bad. You can see on Apple the bearish price action closing below the 50 EMA and our last line of Fibonacci retracement support, and the bearish trend is picking up momentum with that 5 EMA crossing below the 13 and getting ready to cross below the 50. So we'll know soon after earnings if Apple's going to be a buy or a sell. And right now you can see that everybody is starting to sell these stocks, getting ready for bad earnings reports. Next up is Tesla stock, and Tesla already had their earnings, and ever since they've been slowly bleeding out. Tesla has been a strong stock in finding support at the 50 EMA, and we're just about $1 away from finding support there again. Keep in mind, Tesla is trading in a bearish trend with the 5 EMA below the 13, and the 20 simple moving average is starting to roll over and head negative. So if Tesla does not find support at the 50 EMA and we get a price action close below the 50, it could be bad news for the Tesla bulls, and the Tesla bears are likely to come in and start driving Tesla lower. So if Tesla does close below the 50 EMA, look for support levels at $365, and if that support level breaks, your next line of support is right around $329 on Tesla. Next in, let's check in on Bitcoin, and we see Bitcoin did hit our price target of $13,800 today and started cooling off ever since it got there. So now that Bitcoin got to our price target, I would not be surprised to see Bitcoin consolidate under this level and get ready for another attempt to break out of this resistance level. So if you've been waiting to get in on Bitcoin, I would wait and be patient, and let's see where Bitcoin is going to find support. And it's holding up above the 5 EMA right now, but it wouldn't be surprising to see Bitcoin come all the way back down to the 13 EMA. So I don't recommend chasing something like Bitcoin after it had this huge move, and if you're not already in it, you probably don't want to buy just yet. Wait a few more days and let's see if Bitcoin's going to cool off, and let's see where its support level sets up. And if you then want to get in Bitcoin, it'll be a much better entry at that point. Another entry on Bitcoin is if we do break above 13,800 and test it as support and bounce, that could be another good opportunity to get into Bitcoin. But right now, Bitcoin does need some time to cool off, and it's a little overbought. So I don't expect Bitcoin to continue to explode through these resistance levels until we see somewhat of a consolidation and a cool off after this huge monster bull run that it just had. Next up is the financial sector, and financials got routed today, going down negative 2.5% and opening up a huge gap above. So the financial sector is looking bearish, and we can see that that bearish trend is picking up momentum. So that's not great news for the S&P 500, and we need the financials to not form a lower low. So right now we need to put a support level right around $23, and we need to see if financials can stay above that support level so that we don't get a daily lower low on this chart. You can see here we failed to form a daily higher high, and a daily higher high would have been bullish, but we never got one. So now we're looking to see that we form a higher low, and that'll give us an opportunity for the bulls to make another attempt at that resistance level. If we break below and form a lower low, the bears will be in full control, and that will be a bad sign for the S&P 500. Next up is the industrials, and we see the industrials looking bearish today as well, and we see we're also at another very important support level. So if the industrials close below this support level tomorrow at $75, that will be a lower low on this chart, and as we know, lower lows are very bearish. So the bulls need to step in, and they need to start buying off these support levels. If there's any hope for the stock market to bounce off of these levels, we need to see it soon. If we do break below this support at 75, we're likely going to see the gap close on the industrials all the way down at a price target of $72. That will be a lower low, and that will be bearish for the stock market. Next up is the healthcare sector, and we see healthcare also bearish. So we're seeing bearish price action and trends all over the stock market today. And we still do have an opportunity for healthcare to form a higher low. So we'll move our support level down to $101. And if healthcare is going to come down to this level, the bulls need to step in and start buying at these levels before this bearish chart gets out of control and the bearish momentum picks up. So right now we can see we have short-term and medium-term bear trends almost everywhere in the stock market. And it's no surprise with how much the sell-off was today with the VIX going up into the 40s. That's exactly what the VIX warns us about, and that's why we've been watching the VIX so closely right here on this channel. You can see when the VIX gets out of control, we get these huge sell-offs, and they're across the board on the stock market. So we need to see the bulls start stepping in a very real way, or the bears are going to start taking over. Next up is gold, and we see gold broke out of our consolidation wedge to the downside. That's why it's so critical that we watch and we wait when we're in a consolidation, because we don't want to guess and we don't want to assume it's going to break out one way or the other. We just want to be patient and we want to watch until we see which direction it's going to break. So we saw gold break to the downside. So we're looking for opportunities to buy off support, and our last support level on gold was 1860. If 1860 breaks as support, our next level of support we'll be looking to buy off of is 1810. So we're in a bearish trend on gold, and we have bearish price action, so we're likely going to see a buying opportunity at one of these support levels. The same thing with silver. We broke out of the consolidation to the downside. And if you're looking to buy silver, you want to be looking at support level right around $22.58. So going back to the S&P 500, remember volatility is back in a real way with the VIX in the 40s. We could see huge swings to the upside and the downside from here. It's likely we're going to see a short-term bounce, and we could see the market retrace for a couple of days. And if we start getting good earnings reports from Apple and Amazon, that will expedite the bullish trend going back into the up direction. But we need to be patient, and we need to wait and watch the trends and watch these support levels, because right now the bears are fully in control of this market, and this is absolutely a falling knife. So if you're not sure what you're doing, just be patient and wait for a confirmation bounce. And if you're going to trade this volatility, make sure you know your entries and exits very well so that you're not caught in the wrong position. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And go ahead and subscribe to my channel if you haven't already, so you can follow along with all of my daily analysis updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.